We begin with a big issue here in New York City. The quiet period begins for the Fed. The Fed leaving behind a trail of confusion.
It's about the communication.
There's been a communication problem.
Are we doing this as an insurance cut, or are we doing this because we truly believe that the economy's slowing?
Whether it's 25 or 50.
25 or 50. They'll probably cut 25.
50.
25.
50. 50 basis points is quite unlikely.
I don't think it would be horribly shocked if they cut 50.
I think the Fed is lacking justification for cutting rates right now.
They're answering the question in a way that's confusing to the markets.
They have to be mindful that there is less opportunity for them to catch up if they find themselves behind the curve.
So the key question for many of you, do we have a better idea of what's coming July 31st and beyond? Joining me now around the table, Lori Calvasina of RBC Capital Markets, Michael Kushma of Morgan Stanley Investment Management, and Elias Cohen of Neuberger Berman. Let's begin with you, Lori. Do you have a better idea of what's coming?
I think so. I think we know more or less that there's a cut coming. Whether or not it's going to be 25 or 50 remains to be seen. My guess is 25, but, we'll see what happens.
We've had an argument for each, 25, 50, and perhaps even none, Elias, on Friday with the Boston Fed President Eric Rosengren. What are your thoughts on the issue?
I think we're going to be seeing probably 25. We're now into a decelerated growth environment, which is not too surprising because the Fed was just raising rates last year. It can take 18 months for all that to work through the economic system.
Yeah.
So if we get this ease, which I think we will, the whole global monetary system should ease up, supporting growth and equity valuations.
We'll get to the valuations of equities in a moment. Michael, it's the and beyond that I think we're grappling with. The July 31st thing I think is largely played out. Most people coalesce in the idea of 25 basis points. Some people still pushing for 50. But the and beyond, where's Morgan Stanley on the and beyond? What happens next?
Well, the and beyond depends on how this works out. That I think the Fed is talking about an insurance cut in the sense they're worried about where the trajectory of the economy is going, not where it is necessarily today. And Rosengren was pointing that out, that nothing looks too bad now, but where is it going to be 3 months, 6 months, 12 months from now? And they need to take action now, given the lags in monetary policy, to make sure we don't dip back below 2% growth in 2020.